Hello and welcome to ET Now. You're watching IPO Central, and my guest today is from Tenneco Clean Air. It's a company which is coming out with an IPO on November 12th. The IPO closes on 14th, price between 378 to 397. It's an OFS for 3,600 crores, and that values the company at little over 16,000 crores at the upper end of the price band. Tenneco Clean Air is a subsidiary of US based Tenneco Group, which is a $16 billion group there. And joining me today is Arvind Chandrasekaran, who is the whole-time director and CEO of the company. Arvind, take us through your business profile first, and then we'll take on more questions on the financials.
Yeah, sure. So first of all, thanks for having me. So I'm Arvind Chandra, CEO and whole-time director for Tenneco India. So we're very excited about this IPO. Our Tenneco parent, we're a $17 billion multinational company. We're a tier 1 auto supplier. Our customers are all the automotive OEMs across passenger vehicles, commercial truck, off-highway. When you think of Tenneco, you need to think of R&D and technology. Okay, we're basically a technology company, and that's our biggest differentiator. We have access to 5,000 patents and 7,500 plus trademarks. So you can imagine, right, sitting here in India, having access to patents across US, Europe, and even Tenneco China is quite a bonanza for us. So that's our number one differentiator. We're also a house of brands. You might have heard of Champion spark plugs. You might have heard of Monroe suspension. These are pretty well known in the auto industry. Our parent is pretty large, right? $70 billion, 180 manufacturing plants across 30 countries, 40 tech centers, and serving over 100 customers. So our parentage is very strong. In India, we are much smaller. Obviously, we are about 4,400 crores. We've been in India 40 years. We have 119 customers. Our market shares are very strong. We are somewhere between 40 to 60% in terms of market shares across. For example, we always say that 1 in 2 passenger vehicles has a Tenneco shock absorber, and 2 out of 3 commercial trucks has a Tenneco Clean Air system. And even in off-highway, we're pretty strong. Our top 10 customers are relationships, Indian OEMs, for example, Indian and, let's say, overseas OEMs based in India. Our relationships go back 20 plus years. So we're very strong from a market standpoint. We resonate very well with our customers, and we're very excited to be here for the IPO.
What brings you to the primary markets, given the fact that you have a strong profitability track record and you're a subsidiary of the US company?
Yeah, so this right now, this IPO is an OFS, right? And it's not a primary. What it does right now is it gives us currency to tap into capital markets for the future. We want the optionality because we have now reached a point of scale and profitability. And as you rightly said, for 4,400 crores, our profitability is pretty decent. Yeah, 18.6% EBITDA, 12.6% PAT, and an ROCE of 57%, which is a pretty amazing number, right? So from here, we see a lot of tailwinds, and I think the growth is going to be pretty substantial for us, and we are very excited about that. So this OFS just creates that optionality to reach out to capital markets if and when we need it in the future.
You operate in the Indian market, and you gave us a market share that you hold in various segments there within the passenger car and the commercial vehicles. How do you look at India from a point of view of growth here, given the fact that we've seen hyper competition in this market there, and also the fact that there are multiple players here? Means if you look at your own segment, there are multiple Indian players who are available in the same segment, providing the same material and product.
Yeah, so you have to remember that our OEM customers, what do they want, right? What do they need? They need technology, right? They want the latest and greatest technology, but they just don't want it as such, right? They want it to be 30% more affordable, for example. They want to take weight out of the product so they can get a CO2 benefit. They want the product to respect the packaging environment. And most importantly, they want the product to be launched in a record time. Gone are those days of, 36 or even 24-month validation cycles. They want something from drawing to production in 6 to 9 months. And because we are directly tethered, right? Tenneco India is directly tethered to the parent group. Those patents I talked about, 5,000 patents, can be very quickly brought into India and applicated, if I can use the word, into the Indian environment. And that, because of the strength of our local applications engineering team, makes it a win-win, right? Access to the patent, bringing that patent into India rather quickly. We also have state-of-the-art tech centers in India here itself. So, yes, there are always competitors, but every time technology and complexity and time to market and space and affordability, all these come together, we believe we are one of the very few suppliers that can resonate on all these value attributes from our customers.
So do you have a long-term supply agreement with many of the OEMs in the market?
Yeah, we do. And again, it depends on the customer. So they range from 1 year to several years. So typically, auto agreements are, they're program life based, right? And these programs range from 5 to 7 years. See, we are a very long sell cycle kind of business, right? So if you want to look at our company, you have to kind of zoom out 5 years and look at it over a longer period of time. And that's what we offer. We offer stability and stable growth. Just our products, right? The validation and homologation of our products itself takes, sometimes a couple of years, especially for new technologies. And therefore, because we've been with our customers, like I said, the top 10 customers, 20 plus years, we've been in India 40 years, and because we bring technology to our Indian OEMs, and Indian OEMs are really excited about having those new technologies, that helps our resonance with our Indian customers.
Give me a sense of the kind of revenue growth that you've seen, because I was looking at your numbers. FY24 you had 5,400 crores on top line, but that fell to 4,890. Even in the Q1 numbers, it's a flat growth on a year-to-year basis. So what's happening in this market for you? If it's such a growth market, why is such volatility coming in for you?
So, first of all, to explain the difference between total revenue from operations and value-added revenues, they're not the same. So what you're looking at, the coming down of it, is because in total revenue from operations, we have some pass-through components, precious metals, platinum, palladium, rhodium, and substrates that are directly controlled by the customer, and they pay us a holding fee. And the customer has every incentive to reduce the loading of these precious metals by, rather than importing them, having them localized, etc. So those revenues will kind of come in the downward direction purely because they want to reduce the amount of precious metals they want to use. As far as we are concerned, you have to look at the value-added revenue, which is the total revenue minus these pass-through components. So if you look at value-added revenue, the last 3 years, we've actually grown. Our CAGR has been 6% for the past 3 years, and we've outperformed the market, which grew by about 3.5%. Now, in the future, we have quite a few tailwinds. One is the basic tailwind of the Indian macroeconomic conditions, right? So if you look at CRISIL, they've talked about 4 to 6% growth of the Indian automotive market. So we benefit from that without doing anything. Now, on top of that, we have 3 tailwinds. One is content per vehicle from legislation and from premiumization. So content per vehicle through legislation is because BS6 is going to be BS7. CAFE norms for CO2 are coming in. You're going to have TREM 4 going to TREM 5. So all of these legislations will add more content for clean air and powertrain. That's one half of our business. And on the premiumization side, the last 5 years, people stopped buying cars. They started moving more to buying SUVs. And now what's going to happen in the next 5 years is the premiumization within the SUV in terms of the ride handling and shock absorber technology. So that premiumization and the disruption of the shock absorber business will also add additional content per vehicle for us. So that's one, content per vehicle. Second one would be exports growth for us. And exports is in a sweet spot for us. I mean, we've only got about 5% of our product sales are exports. We think it's going to grow to much higher numbers, higher penetration, if you will. And the reason for that is because finally we have technology equalization. India was always behind the West in terms of technology. But now if you look at our clean air business, for example, we are at the same level technology or emissions regulation. So when BS4 went to BS6 and then RDE came in, the BS6 with RDE is exactly the same as what Europe uses. So we can export the same product that we're making in India overseas, right? And the same thing for shock absorbers, right? Shock absorber technology is also becoming very premium, and we already have new technologies here in India that we can also export to Europe, for example. And the last tailwind is that of cross-selling. We are now structured by region and not by verticals. And because of this regional structure, it allows us to do a lot more cross-selling and penetrate that white space. So all of this content per vehicle, exports, and cross-selling is helping us grow our business in the next 5 years.
Can you also take us through the kind of demand scenario which we have, because we've seen some kind of demand softness in passenger vehicles, though after GST we've seen some pickup which has happened, but even in the commercial vehicle segment where the GST impact hasn't been much, you're seeing a lot of inventory on the ground, and as a result of which production has also slowed down a bit.
Yeah, so look, the beauty of our arrangement, the products, the way they come together, they're very nicely hedged, right? Clean air powertrain on one side, which is engine-based, shock absorber, right technologies on the other side, which is chassis-based, right? And if you look at the spread of our total value-added revenues for India, which is about 4,400 crores, it's spread very nicely between the end markets of passenger vehicles, commercial truck, off-highway, industrial, and so on. So it gives us a natural hedge. So if PV isn't doing well, CT is going to lift us up, and tractors is going to lift us up if CT doesn't do well. So I think of course, we are in a cyclical market, you could say, but in general, we're offsetting that cyclicality because of the natural spread of our business across all segments, including even stationary generator sets, for example. So we are in a lucky space for that matter. Now, as far as your comment on GST, that remains to be seen. Right now, there seems to be some kind of short-term irrational exuberance. We don't know how it's going to end up in the next year, for example. So I think the answer to that question is let's wait and see until February, March to see if it's a permanent kind of lift of the entire Indian market. These GST cuts are significant, definitely. We agree, and we are also lucky because the timing of the GST cuts is coming at the time that we're doing the IPO. So we're quite jubilant about it. But I would be a little bit cautiously optimistic before making any kind of predictions on how this GST is going to benefits going to trickle down into future years. So far, we have not taken that into account in terms of a lift from where we are. But I think around February, March of next year, we'll have a better idea.
How do you look at the various contracts that's come in? I think if I'm not wrong, you submit your RFQs and then and then you get selected based on your pricing. And if I look at some of the Q1 numbers, the amount of tenders or the contracts that you've received is lower than versus Q1 of last year. Is there a competition there in terms of pricing in this segment for you?
No, yeah, look, price is always a key value attribute for our customers. But I think where we feel we have a definite competitive advantage beyond price is just the technology and the application of bringing in the latest and greatest technology to India and helping our OEMs differentiate themselves versus their competition. And also time to market. I think time to market has now become so important for the OEMs that in some cases they even willing to pay you a little bit of premium for being on time, because they have critical launches that are often coming up and require very short development timelines. So look, we respect our competition. We know that price and affordability are important. One thing we do that's very unique to us is a model of operations excellence. Our model of operations excellence, which we call the P3, People Performance Pride, ensures that we have a continuous improvement process in place that constantly benchmarks the entire P&L of our company, especially on the factory floor, to world-class manufacturing practices. And this is now part of our DNA. If you look at the last 3 years, our EBITDA has improved by 400 basis points, and this is purely because of this DNA That is now part of our daily routine. In fact, even as we speak, there are people in our factory floor that are constantly looking for continuous improvement and cost cutting across the entire P&L, whether it's raw material cost, conversion cost, fixed cost, SG&A, indirect material, automation, labor cost, you name it. All of these areas are being looked at. And so as we keep pushing technology, the desire to make sure that our pricing is on par with customer requirements or customer expectations, we're able to do that because of our focus on continuous improvement.
Finally, what is the kind of order book that you're sitting in with respect to volume commitments or value commitments?
Look, we have not mentioned this, the order book exact number. It's not in the RHP. But what I would say is that we are in a very strong position. Like I said, we have very high market shares across multiple segments. We have also very high customer resonance and stickiness. We have relationships that go back 20 plus years. All our OEM customers come to us as technology leaders. Our win rates are pretty high on RFQs because very often we are asked to come even before the RFQ is sent to suppliers, because we like to co-develop products with our customers over the long term. So I think from the point of resonance, right? How do you resonate with your customers from that standpoint? Affordability, space, weight, time to market, and the fact that we are a technology player gives us that confidence that we're going to grow very strong in the next 5 years.
Arvind, it was a pleasure talking to you today. Thank you very much for joining us. Your IPO Tenneco Clean Air is coming out on November 12th and closes on 14th. 378 to 397 is a price band, OFS of 3,600 crores and a market value of 16,023 crores at the upper end of the price band. Thank you very much for joining us today on IPO Central, Arvind. Thank you.